Here's the headline out of CNBC. Get ready for the Dow at 6,000 by 2016, says a pro. And he broke that down with them a few weeks ago, so I wanted to get him on. I really appreciate him coming on harrydent.com. And he wants to get into 2014, the year of defaults for China, and Germany falls off the demographic cliff, and how that affects us here, and when we hit our baby boomer demographic cliff, and more. Mr. Dent, thanks for coming on.
Nice to be here, Alex.
Well, break it down for us. Well, first off, I'd like to cover this Dow at 6,000 by 2016 and then get into the demographic cliff.
Well, I'll explain other reasons, but there's a big pattern in the stock market that should be more obvious to people. We've seen 3 bubbles now, one that peaked in 2000 and 2007, and then now each bubble has gone to new highs, but each crash in between has gone to new lows. So this is called a megaphone pattern. It's a very similar pattern to how the stock market peaked the last time a generation peaked in the late 60s, early 70s. There were 3 tops at higher highs and then a big crash in 73, 74. This would project that the Dow is going to hit about 17,000 in the next couple of months, and then it's going to fall in the next couple of years to just below 6,000. So that's a bigger crash than last time. That's like a 65% drop. So this is not something you should listen to your stockbroker and say, oh, just stay the course, stocks will come back. When stocks had peaked with major generational spending peaks like in 1929 and 1968, stocks did not get back to those levels for 24 to 25 years. So we're in, I think, for the largest downturn in our life. It's going to be very much like the 1930s, what I call a big debt detox. So people really need, I actually took a 70% cut in my advance from my publisher to get the Demographic Cliff book out early this year, because I think we're close to a top here, and I think people need to make some very hard decisions.
I agree. I want to talk about that book again, but expanding on this, you're not the only analyst saying this, and we see governments creeping towards the pension funds, both the public and private, the IRAs, all of it. They're going to, quote, save it, I guess, when the plunge comes by taking it over and taxing it. Seems to be what they're openly saying they're going to do. I don't think a lot of this is hidden, but I'm not hearing a larger discussion of it.
Well, people should be worried. Taxes are going to have to go up. The government has promised entitlements it can never, ever, ever pay, especially in a difficult economy that I'm painting and seeing for the next 6 to 10 years. Our population forecasts are much higher than they're going to actually be. Births are falling. Immigration falls in times like this. And this is what happened in the 1930s. So yeah, people, taxes are going to go up in all different types of ways, and especially more affluent people. If you don't protect your wealth from this bubble burst and protect your wealth from taxes, you're going to be in for a big surprise in the next several years.
I want to get more into that and what your book breaks down, the technicals, but specifically, how would you protect your wealth for the average person?
Well, here's the thing to understand that we warn people about. This only happens once in a lifetime. It's a bubble boom bursting, a debt bubble bursting. And when that happens, all financial assets go down. And all you have to do is go back and look at the crash in 2008. Stocks went down here and around the world, large cap, small cap, Asia, Europe, emerging countries. Real estate went down. Commodities went down. Gold and silver went down. And everybody was told, well, you can protect yourself with gold and silver, not in a deflationary crash, an inflationary recession or crisis like the 1970s. Gold and silver was great. It will not do well in this. So you basically have to take your profits off the table, get safe. You can short the markets if you want, but that takes some guts and that's risky. But if you just get in safe investments, when everything falls, you're going to be able to buy stocks, 20, 30, 40 cents on the dollar. Real estate, 30, 40 cents on the dollar, and everything else. So that's the trick. That's what Joseph Kennedy did in the Great Depression. He got out of the stock market at the top. When his shoeshine boy was telling him to buy stock, he said, oh, man, this thing's got to be over. Same thing. I had every cab driver giving me internet tips in late 99. I knew that one was about over. And then he just bought when things were down, and he made a fortune.
That's right. And so it's an opportunity for those that are positioned beforehand. Looking at that, though, obviously there's a race devaluing currencies, and I guess the establishment thinks, well, if there's actually a depressionary thing coming, that will somehow balance out. How does the inflation on the dollar and other currencies then tie into a deflationary situation in the rest of the economy?
Well, the one thing, Alex, deflation is good for the dollar. When we started to deflate and debt started to deleverage in late 2008, the U.S. dollar went up 27%. It was the only thing that did go up versus other currencies. Now, the reason this happens, people don't understand, and this is something we have to argue with the gold bugs about constantly, but the U.S. dollar fell 58% from 1985 at its high in the Reagan era down to the beginning of this recession in early 2008 where it bottomed. 58%. The reason is we created massive amounts of debts, trade deficits, and now QE on top of that. We've created massive amounts of money, and that devalues, that debases the currency. We debase the dollar in the boom. When you get this bubble burst, when debt deleverages, you're destroying money. When financial assets go and a Dow goes from 17,000 to 6,000, that is destroying 2/3 of people's wealth in the stock market overnight. Less dollars chasing the same goods is the definition of deflation, and that's how you get deflation. But less dollars also means they're more scarce, and we're reversing the debasement of our currency. So really, this crisis is exactly what would put the dollar back in balance, would make real estate more affordable for young families again, stocks better long-term investments, all this sort of stuff. We need this reset, and governments just don't want it to happen because nobody wants the music to stop on their chair. Everybody wants the crisis to hit the next administration.
Sure.
So central banks and politicians around the world just keep printing money to cover over the crisis, keep the banks from falling over. The banks would have gone under, a lot of them. We had a 1930s scenario building, and you know what? As bad as the 30s were, we had a huge debt detox, and we basically cut the debt from 190% of GDP in this country to 60% in the next several years, and that allowed us to grow again.
A 30-year boom. 30-year boom.
Yeah, an incredible boom to follow that. We came roaring out of it. We're not coming out of this. I cover in chapter 2 in the book, I talk about the Japan coma economy. Japan has been doing this QE stuff since 1997 when they went off their demographic cliff, and I was one of the only people in the world that predicted the downturn of Japan in 1989. And they've been doing QE ever since. They have not deleveraged their debt. They have not rebalanced their economy.
Sure, I mean, undoubtedly you're right. That's why they call you, top pro and CNBC. But let's just expand on this then in layman's terms for folks. With what the global policies are right now versus what we think they should be, what do you see happening the next few years? Does this happen overnight? Does it happen in a process? I mean, I know generally, I know you don't have a crystal ball, but what do you see happening?
Well, we do kind of have a crystal ball. We predicted this downturn, Alex, by the way, in my first book in 1989. We predicted the simultaneous collapse of Japan in the 90s and the greatest boom in history and the greatest stock market surge in history for the United States and Europe. What we do is we look at demographics. People enter the workforce age 20, earn and spend more money, raising their kids and families, buying houses, borrowing money, and they peak at age 46. Now, everybody doesn't, but the average person spends the most money in their life at age 46. So the simplest indicator I have of many, but I call it the spending way, we just move forward the birth index in any developed country and move it forward 46 years for that peak in spending where people will have the highest impact, the highest numbers. And that would have told me, and it did tell me in 1988, that we had a boom from 1983 with baby boomers that was going to last until about 2007. And then the baby bust would slow down our economy, less spending, less house buying, less borrowing, all those things until about 2023. So we predicted these demographic headwinds and that we would go into a crisis starting in 2008 just with demographic. But there's another factor that's equally important. We've seen the greatest debt bubble, which then in turn fueled the greatest real estate bubble in modern history. Debt got up to about 4 times GDP in this country versus 190% at the top of the roaring 29 bubble, so twice as much debt. And that doesn't count $67 trillion in unfunded entitlements.
Well, that's my question. How do those two bubbles collapsing go together? They go down at the same time? Or
yeah. Well, that's what happened. At some point, when this QE doesn't work or something triggers, like last time, the subprime crisis in the U.S. triggered stock crashes and debt crises around the world. All it takes is something to pop the bubble. I think it's going to be Germany going off. Germany's downturn looks just like Japan's did to us in the late 80s. It's the steepest downturn in demographic spending of any country in the world at this point. And China's got an off the charts, and I mean off the charts, real estate and debt bubble. They have overbuilt everything in their economy 10, 12, 15 years ahead and moved people, 220 million people in 12 years into cities with no skills. They got 27%.
It's a time bomb. It's a time bomb. He's got his new book out dealing with this, and I mean, I don't just immediately believe whatever I read. He's had so many predictions that have come accurately true. He, of course, was a big strategist at Bain Capital that has to understand the future of companies and things to make the right decisions with what they do in acquisitions or in sales. But when you look at this is all the big governments talk about, is the demographic cliffs. You've got from Italy to Japan to Russia to Germany to England to the whole UK, the US, Canada. You got a 1.4, 1.3, 1.5 replacement rate. You need 2.1 children. Parents have 2.1 children on average to just replace the society. So it's not just a demographic boom cliff we're at. It's that the death of the West that Pat Buchanan wrote about a decade ago. So you were getting into China and the time bomb, and they've got all their crazy problems and just empty ghost cities they've built. And then you've got all the government corruption going on and no real social goals, and then a police state being set up. Well, I mean, where is it all going to go as all these countries go off the cliff in the next 5 years?
Well, you know, it can only go one direction. Japan's already showed us what happened. Japan was the first country to see their baby boom peak. They had a real estate bubble. People thought real estate can never go down. I said, no, this bubble's going to burst. Their stock bubble burst. So that's what happens. Wealth gets destroyed suddenly, then real estate goes down. People don't realize real estate's down 60% in Japan and never has bounced 22 years later because you got more older people dying, and they're sellers of real estate, than young people who buy between the age of 27 and 42. I mean, we know exactly when people buy home. So people don't realize the consequences. Not only is the baby boom peaking in more and more countries, and when it does, you see these bubbles burst, you see real estate go down, you see stocks collapse, then that causes bad loans in banks, and then they fail, and then that destroys debt, and that destroys money, as I said. These bubbles do burst. Japan already burst, and everybody's thinking, well, that's just Japan. Well, the U.S. came next. We predicted that. Europe is the next major region to see a major downturn in demographic spending, starting with Germany, the steepest, the UK, Austria, and then Italy. But then all these countries go off the cliff. And East Asia, Japan's gone off, but South Korea comes a few years from now. China is the first emerging country to see their workforce peak. It's already slowing. It'll slow a bit the next 10 years, and then they go off the cliff. An emerging country. All other emerging countries have incredible demographic trends for decades to come. So this is predictable stuff. But the important part, as I was saying earlier, with all this debt and all these real estate bubbles around the world, and the real estate bubble in China is far more overvalued than anywhere else, and with high vacancy rates. I mean, can you imagine a real estate market where you got 27% of condos vacant and prices are still going up?
So what happens? NASA came out with a report yesterday and said the end of industrialized society. The British Ministry of Report in 2007 was classified but leaked, saying they believe in basically global total collapse, and the governments are digging in for that. Why not try to reverse this? Is there any way to reverse it?
You know, the only thing you do, you could learn a lesson from business. Governments could. I call it Chapter 11. You know, they used to have Chapter 7 bankruptcy, which they have, where you just basically a fire sale. You sell the assets, distribute the proceeds to creditors, and you're over. Well, that's a dumb way to do it. The United States came up with the innovation of Chapter 11, where the courts protect a company long enough for it to sell off its assets in more orderly, not a fire sale, to cut costs, and most importantly, to renegotiate debts with creditors. You go to your creditors and say, look, if we go on fire sale, you're going to get 10 cents on the dollar if you're lucky. But if you let us write down your debt to us 50%, which is a win-win for you, then we'll be able to continue forward. We need to restructure the debt. It wasn't just the $17 trillion in government debt. We created $42 trillion in private debt. And that debt basically, most of it was created under George Bush between 2000 and 2008, during the bubble part of the boom. If we just wrote that debt back down to pre-bubble levels, we would get rid of $22 trillion of debt overnight. Now, the banks would have to take hits, but they're the ones that should take the hits. They're the ones that lent this money to unsophisticated.
They're the ones that created the derivatives.
Yeah, they created the derivatives that financial institutions need to take this hit, not Homer Simpson. And Homer Simpson's been taking the hit with underwater mortgages.
They're going to kill Homer Simpson, and then who are the banks going to live off of if they kill the golden goose? I want to ask you that and talk about your book that breaks this down that obviously everybody needs to read. Harry Dent, harrydent.com is our guest. And I'll tell you what's scary. Everything he's saying is right there if you follow the news, folks. Harry Dent joins us. I wanted to talk about his book coming out and break that down here in a moment. And I want to go back to the CNBC report, get ready for the Dow at 6,000 by 2016. If I look at the socialist groups in government and some of the big banks that work with them who always want to saddle Homer Simpson with their bad bets and their derivatives and other counterfeit instruments, their plan is clearly set up at the police state, being done worldwide. They're financing that. And then, as things collapse, pose like they're the savior and take over the pension funds, the private pension funds, the government pension funds, and really not even scale back a lot of the payments and things that former government workers and others are going to be getting that are clearly unsustainable. And so they don't take a haircut. Everybody else does. And if you don't like it, well, Homeland Security now basically lists not liking the Federal Reserve policy as terrorism. And the Tea Party is terrorist, and returning veterans are dangerous, and gun owners. We see the move now to use Northcom, Homeland Security, as a domestic control arm in the storm that's coming, and that they're going to use the economic crisis to get everybody on welfare, basically, use the scaled-up industrial capacity to at least give people their bread and circus. Even though it's scaling down, it's still scaled up from whatever was in history to where they can give people their baubles, their bread and circuses, and then in exchange convert us to a authoritarian system where the big banks are above the law with corporate diplomatic immunity ruling over us with a form of global governance and $100 trillion every decade in carbon taxes to fund and back their SDRs. Now, Mr. Dent, from what I've studied, you study demographics. I study the wide spectrum, but I know you study that as well. You're one of the smartest guys out there on record when it comes to predicting things. Do you disagree with the gestalt I just threw out, or do you add something to it? Because it looks like this is pretty well planned out to me.
Well, yeah, that is the trend. Governments kind of take more power, and things go wrong. It gives them a reason to step in. I say it's even worse than that, Alex, because what they're doing here is killing the golden goose. They're rejecting the free market capitalist system that made us so rich. That requires booms and busts, inflation and deflation, innovation, creative destruction. You have to have failure as part of the system. It doesn't work without success and failure, and they're just saying, no, nothing can fail. We can't let big companies go under. We can't let banks that made terrible loans go under. And we can't flush this debt out of our system. Like you say, the best thing that could happen for the average household is they get their mortgage written down to what the house is now worth. And I see houses going down much more in the next crisis. So I think the only saving grace for me, Alex, because politically we'll never deal with these entitlements. We'll never deal with this debt. We'll never let government kind of give up their control of the economy. We're going to have a crisis. The government's going to have to fail. People are going to have to lose faith in central banks, quantitative easing, which is just like taking more and more of a drug to keep coming down off a high. That's all it does, creating money out of thin air. That's another way to create debt, just like bank loans that get too high. We need to basically have a crisis so we can have a revolution, because this is not going to happen politically. And I think you're right. The government's almost in some ways, a crisis would give them the chance to step in and have more control and martial law and stuff at times. But I think what's going to happen is the crisis is going to be so bad that people are going to lose faith in governments, and especially China. Now, economists say, China's like the new state capitalism, the new model. Wow, look how great they're doing. China, to me, mark my words, is going to prove that governments don't know how to manage economies and shouldn't manage economies. They should just set clear, good, simple rules and let the free markets work and let them go up and down and let them succeed and let them fail. Let them invest, let them innovate. They're killing the golden goose. So to me, it's even worse than what you're saying, because you kill capitalism, and we're already aging. We're already going to slow just from aging and slowing demographics. Like you say, no replacement rates for most populations, and we're better than most because we have higher than Japan or Germany. But man, China has really gone off the reservation. If we're printing money, they're printing condos and just building railroad stations and bridges and highways and office buildings and malls that are empty in cities and whole cities. So this is the craziest thing that ever happened. To me, if we don't have a crisis soon, we're in real trouble.
I agree with you, but the establishment cannot stand to let things be somewhat free, even somewhat. They've got to micromanage it. They've got to give the insiders the knowledge. They've got to bail out Goldman Sachs and J.P. Morgan and then sign the debt onto us and have the media a year later say, I mean, in 2008, it was their fault. A year later, it was how I was in debt. I was bad. I owed the trillions. I owed, millions of dollars to the government in the aggregate. A total fraud. But I got to say, Mr. Dent, a lot of it lies with the public. If the public politically is so mesmerized with Justin Bieber and LeBron James and all the rest of the propaganda and have had liberty and wealth so long that the public, not everybody, but a large portion of them are delusional, dumbed down, stupid, lazy, give me a handout, scum who literally look at me and think I need to pay more so they can sit on their butts. A, do you agree with that? B, what happens when it all goes to hell in a handbasket? I see the hordes of them voting in a democracy, not a republic, two wolves and a sheep voting on what's for dinner, to literally politically bring in authoritarianism and absolutely make the producers their slaves, or a French Revolution. I mean, every angle of this, I just see bad to worse.
Well, I would add to that we're also spoiled. We've had the greatest boom in history, really since World War II, but especially 1983 to 2007, and that was just a 46-year lag that we show in the demographic clip, as simple as economic tool, just a 46-year lag on the baby boom birth index. So this baby boom created a great boom, but we thought, hey, yeah, everybody's supposed to retire with $100,000 a year pensions and all this, Social Security, Medicare, Medicaid. We can't even afford the health care we had, and now we're expanding it. Paul Ryan's plan wasn't even close to what it would take to balance out entitlement. So we're spoiled, and I think we need reality. And I've got to hope that when things go down, if we have a big enough crisis, people will realize, governments, economists, businesses, and everyday people realize we're bankrupt. We're not bankrupt like Chapter 7, because we're still the largest country in the world, and we got better demographics than most of our competitors. But we cannot go on with these debt levels and these entitlements. We've
got to right the ship.
We got to wake up and get real. We got to wake up and smell the coffee. And I think that's what the good thing is. People realize. I used to turn around companies at Bain and Company, and I did it with small business as well. And when a company's really in a crisis, people get real really quick, and you can make changes. You can fire half the people, and people agree to it because they realize if we don't fire half the people, 100% of us are going to lose our jobs, and the company's going to die. So people get more clear. So I've got some level of faith that when we have a crisis, people will wake up and they will get smarter about things. And then they'll listen. I hate this. Most people don't listen to people like me. Oh, I'm too bearish. Look, I've been bullish for 20-some years. I predicted this great boom when nobody saw it coming, and predicted the fall of Japan and all these other countries to follow. But they'll start listening to people who told them the right things. Everybody's telling them it's okay. Warren Buffett, of all people, is getting out there saying it's okay. The government's doing the right thing. How can the right thing be printing trillions of dollars out of thin air to cover over a debt crisis? How could that possibly be the right thing?
And then signing us on to more debt. And then Obama saying raising debt doesn't raise debt.
Yeah, of course. Yeah, I mean, I agree. We should just there has to be a standard. It can't be gold anymore because gold isn't big enough and consistent enough with the new economy. But we need standards that say debt can only grow this fast compared to GDP and can only reach certain limits. You can't allow unlimited debt, and that's what we've done. We have run trade deficits since the early 70s. We've run budget deficits except for a few years, and they got bigger in the boom. Even Keynes, that crazy guy, wish he never invented his theory, but at least he said governments should run surpluses in booms and then run deficits to balance out the private economy. But we've been running budget deficits in booms and busts. You can't, and debt grew at 2.7 times GDP from 1983 to 2008. You can't have debt grow that much faster in the economy and not end up bankrupt and in a debt crisis. Any economist that didn't see this coming doesn't know their ass from a hole in the wall.
That's right. Let's talk about gold. I have gold as an emergency backup hedge for collapse, for inflation, for whatever it is. Literally like pirates, bury your gold. That's what I've got it for. I don't have it as an investment. And I bought most of my gold between $300 and $500 an ounce. So even if it plunges or even goes up, whatever, I've got it. I'm not selling it until, we ever go to a road warrior situation, and then I know it'll have some value. But separate from that, I mean, are we talking about raw land? Are we talking about skills? I mean, for the average person, what do you do?
Well, again, gold is in a bubble. I was debating Peter Schiff in St. Kitts, and I know you know him, and he's saying gold's not in a bubble. I said gold went up almost 7 times between 2000 and 2011. That's a bubble. We said gold's a bubble. It's going to be the last bubble to burst. It is bursting. I think gold's going to see $700 an ounce by 2016 when the Dow is at 5,000 or 6,000, and I think it's going to see 250 to 400 around the turn of the next decade before a big commodity cycle bottoms. I mean, commodities peak every 29, 30 years like a clock. So I don't agree with the gold bugs on that. And the truth is there is nowhere to go. You put your money in safe stuff, liquid cash, and cash flow is king in a deflationary crisis. And then if you want stuff, I want stuff I can trade. I want shotgun shells, I want little bourbon bottles. I want silver coins even more than gold.
No, I agree. I got more silver than gold.
Yeah, silver's great for exchanging and buying stuff. Food, dried foods and stuff, cans of tuna. In a crisis, that's the sort of stuff that people are going to want.
Harry, this is scary because I study this every day as a layman from every angle, and any way you look at it, it runs from horrible to apocalyptic. And absolutely, I tell my listeners do this is what I've been doing. And I've got family that's awake, but some family that says, you've been saying this for so long, they don't believe it because I was so visionary. But if you study history, these cycles are there. Right. And now I look at the U.S. government, the British Defense Ministry, all the universities, all their internal prospectuses actually say what you're saying. But just like Japan, for 20-plus years has denied they're even in a recession. They've been in a depression. I mean, they're literally having mass mental illness, just collapsing over there. But if you read a Japanese newspaper, they say they're doing fine. And I see that same scenario here. We just slide into this depression, and then they just keep denying it forever. It's mass mental illness.
Well, and the best way of denial is quantitative easing. You just keep throwing money in the economy, like taking more of a drug to keep from coming down. That's all they're doing is masking it over. We're not facing reality. And again, Japan has proven they have an echo boom generation. Their economy should have turned up again around 2003 by our demographics, and it didn't very much. And then they went back in a downturn. It's because they've never dealt with their debt. They've never let their economy rebalance. You have to rebalance. The free market system knows how to do this, just like your body does if you eat bad sushi. It'll just flush it out any way it can. That's what the economy was trying to do. Flush out this debt, flush out these asset bubbles, flush out these derivatives. We're on steroids, and we're going to die from it. And be in a coma forever if we don't deal with this. So I'm just waiting for the darn crisis to happen.
What's the time frame? The next year, too?
No, I think we're within a month or two of a stock top. Stocks will go first, and then real estate and economy will follow. The economy goes down, you're going to have bad bank loans rack up very quickly. Real estate.
Oh, you're saying 6 months to a year.
Be in big trouble. Yeah, I say it starts this year, and I think the biggest trigger, it may not be the first trigger, but the biggest trigger that makes this a crisis that central banks like the Federal Reserve cannot fight, if that China bubble bursts, and it's already showing the cracks, they're having wealth management products and institutions blow up and start to default, and it's happening more and more. That bubble, people don't understand. The Chinese, the rich Chinese, top 10% control 60% of income, 50% of consumer spending, 85% of the real estate and financial assets, and they save 65 to 70% of their money. And they invest it all in real estate. They don't like stocks and bonds, and their stock market's been a total roller coaster.
They also buy gold.
Yeah, and they buy gold. So if their wealth collapses because this real estate bubble collapses, they're going to stop buying real estate around the world. They're going to have to stop investing. They're going to stop spending, and China will implode. Everybody says there's going to be a soft landing in China. You don't have an extreme bubble.
They're already having thousands of riots a month.
Yeah, and then the rich people are leaving the country voluntarily. They are leaving. When I was just in Australia for 3 weeks promoting the book and stuff and lecturing, and it's like Chinese are buying everything in Australia, and they're buying Southern California, San Francisco, Vancouver, London, New York.
They're evacuating.
They're keeping the bubble going. When they stop buying like the Japanese did in the early 90s, we're going to see real estate bubbles collapse around the world, especially in the most bubbly cities. This is going to be a major crisis because real estate is what really hits people.
Well, Harry Dent, I mean, I've had you on before, and you've never been this wound up. I mean, you're really concerned.
No, I am. I mean, again, I cut the demographic clip. I went I had to change publishers and cut my advance 70% because I said this book, my publisher wanted to get out in September. I said, it's going to be over by then. We're going to be into the crisis. I want to warn people before it happens because this only happens once in a lifetime. That's why, like you say, people are delusional. They don't understand this. A depression like this, a debt detox, whatever you want to call it, a deflationary crisis only happens once in a lifetime. So people don't see it coming. They don't understand it, and they don't know what to do when it happens. This book tells you from A to Z what's going to happen, what's going to go bad, how,
I want to carry it.
what investments are going to go down, and what to do about it. There is this can be the most profitable time in your life if you simply see the inevitable while everybody else is in delusion and denial.
Wow. Man, we got to get you back sooner. I promised to go to calls. We only got like 10 minutes left. We're going to break in a minute. RB wants to talk to the guest from Minnesota. You're on the air with Mr. Dent. Go ahead.
Yeah. Hi, Alex. Hi, Harry. I've really noticed that in the wake of the NGO/EU/USA-backed illegal coup of the democratically elected president of Ukraine, all these big central banks have just been salivating like dogs around a dog bowl. It's just disgusting. And then on top of that, you see like the big world vampire squid, the EU and the junior world vampire squid, Goldman Sachs, is salivating like dogs. What do you think is going to happen there?
Well, this is something we also cover in the book. We have a geopolitical cycle, and I don't know what causes, but 18 years we'll have a good world where nothing goes wrong, like 1983 to 2000. Then from 2001, starting with 9/11 and the tech wreck, and going all the way to the Iraq War, Afghanistan War, the Syria, the Arab Spring, the Indian Spring, and now Russia and Ukraine. We just had a series of political challenges, geopolitical problems around the world. I think this is going to get worse. I think, it's kind of a little bit like Hitler, where Putin says, okay, we took over Crimea, but they wanted us anyway. We're not going any farther. He wants Ukraine. He wants to rebuild the Soviet Union. Russia has some of the worst demographics in the world ahead. In fact, they're one of the few countries that has a declining life expectancy because they're drinking themselves to death. If you ever watch a Russian movie, you'd understand why. I think this is going to get worse. And this geopolitical cycle doesn't turn positive until 2020. So we got 6 more years of this sort of stuff. So expect more of this. Expect more geopolitical conflicts. Expect more problems in the Middle East.
But that's the way to see these governments is they're all like vampire squid, like the caller said, trying to just grab something to eat it. So it's like 2 vampire squid trying to grab Ukraine and absorb it.
Well, that's what they want. They like a business. They want to gain market share. Like you said earlier, they want to gain more control over the economy. The economy works best when there's just good, solid rules, and you do need rules to the game. But and then you let the private economy innovate and grow and rebalance itself.
Should we bring Glass-Steagall back?
Government controlling everything.
Should we bring Glass-Steagall back?
Yeah, that you need. Banks should not. You shouldn't have all these people in all these businesses. Banks should be banks. Investment banks should be investment banks. Brokerage firms should be brokerage firms. Investment firms. I don't even like brokerage firms and investment firms being mixed up, because now the broker's going to sell you their own stuff, whether it's in your interest or not. I mean, that's what they're going to be motivated to do. I think the financial institutions, that's the biggest thing. If we just let each sector do what they do and don't let them cross over, that would eliminate a lot of the problems we've had.
Well, I totally agree with you. And again, people need to get honest with themselves as a culture, that we're not just here putting out fear. This is what's going on. You can debate exactly how the cookie's going to crumble, but societally, the denial has to end first, to have a real debate, to then give the political class the courage to do the right thing, because not everybody in the power structure is bad. And a lot of the people in the power structure are scared right now. They just can't get the public to make the right decisions either.
No, that's right. I mean, that is what's needed. And my problem is, usually I get on CNBC. I'm glad to be on here and have more time. And I got 3 minutes to explain this. I can't explain this in 3 minutes. I spent 6 to 7 hours with audiences in Brisbane and Sydney and Australia, and really got to educate people A to Z about this. And once you do, there is no debate. People agree with me because we're looking at the facts. We're looking at reality, like you say, and this is undeniable. We prove everything we say. Everything I say in the book, there's a graph to show the correlation and show whether this is actually. I've read books 700 pages long, not a graph on them on economics. How can you do that? So if people have time to get educated on this, they will see. People are not stupid if it's explained to them correctly, but it's not. Like you say, everybody, governments and different businesses and institutions all have their motives, and nobody's telling you the truth. I don't work for anybody. I'm not at Merrill Lynch or some major company. I can say what I find, whether it's bullish or bearish, and then no matter what political persuasion it may fall under at the time, I can say what I need to say to people. And I tell you, most people cannot tell you the truth. Your stockbroker cannot tell you the truth. Absolutely cannot. They would be fired from their firm if they did.
So let's go back to the other phone calls here and see what they have to say. Let's talk to Justin quickly in Florida. Go ahead, Justin.
Just want to say great points. I agree with what you're saying here, and good solutions, too. I guess my other question is, since you pretty much touched on everything, is what do you make of the recent bankers dropping like flies?
Would you say bankers?
A lot of banker suicides, a lot of broker suicides, high-level people.
Oh, well, I mean, you know what happened in the 1930s. People were jumping off buildings. I mean, these people, I mean, a lot of them really need to be tried in criminal courts. A lot of what happened here in a lot of things. And when this thing fails, it is going to hit financial institutions. It's going to hit New York City big time. Anybody who just bought a condo for $100 million is going to lose their ass on that. Rich people think you can't possibly lose buying in downtown Manhattan. This is going to especially hit financial institutions and their executives and people. So there's going to be way more of this ahead, and that's unfortunate, but that's just a reality.
There you go. Great question, Justin. Let's talk to Wilbur in New York. Go ahead.
Hi, Alex.
Yes, sir.
Hi, Harry. Harry, I get your newsletter, Boom and Bust. It's a good newsletter. Now, let me say, I do a lot of analysis like you do, macro, microeconomics, technical, cyclical analysis, demographic analysis, like you do. My question to you is, given the massive housing real estate bubble that you talked about in China, which makes ours look like child's play, and now the Ukraine situation, where really the elites now are duking it out, how deep do you think this downturn, this next shoe down is going to be? I know Predictor Rob has got his opinions on it, too. I'd like to see when you're thinking this is going to happen, because I'm absolutely seeing it. It's going to be within weeks to months, not years. How deep do you see it? And will this change the course of events, assuming the elites, don't knock
they always try to start wars during this stuff, sir?
Yeah, bubbles burst, they always burst, and they go back to where they started or a little lower. The Dow has to get back to 3,800 just to erase the bubble. Housing has to go down 55% just to erase the bubble back to early 2000 when it started, and will probably go down 65%. So I see a much bigger housing downturn over the next several years. Stocks are going to probably go down in 2 waves. The next wave takes us, like you say, I think it's going to top by early May, if not earlier. It's 17,000 roughly. We're going to go 6,000, a little below, in the next pump. Then we'll have a bounce after that for a year or two, and then by 2019 or 20, I think you're going to see 3,000 to 4,000 on the Dow. I love to debate Robert Predictor because he says I'm too bullish. He's predicting 600 to 1,000.
Let's talk to Abe in California. Only got about 30 seconds for him to answer the question. Abe, ask your question.
Hey, peace be upon you. It's just a quick comment I wanted to make about the whole humanity situation and where we lie as a species. Look, we, mind, body, and spirit, need to rediscover ourselves. We need to immerse ourselves in the natural 5 senses. Then we will discover the 6th sense, which is essentially the pineal gland.
I hear we got to go, man, because it's a question. But we do have to get back to being real people again, and not just mindless consumers that believe whatever television says. Final comment, Mr. Dent.
Well, we have a 250-year revolution cycle. The last one was the American Revolution and the Industrial Revolution. So I think we are going to see a big revolution ahead. And I just tell people, read this book, The Demographic Cliff. I killed myself to get this thing out in time. And we've got a free newsletter. We've got paid newsletter like Boom and Bust. We have a free newsletter called Survive and Prosper. And all you do is go to harrydent.com, put in your email, and you're done.
Listen, I want to get you back more often than once a year.
Now you can watch The Alex Jones Show live as it happens at Infowars.com/show.